Hi traders and welcome to the Technical Analysis Market Watch on Friday the 23rd of August. So I've seen another big week of big moves on the currencies this week, and they have had some very big levels hit on the dollar index and euro in particular. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that aside from today's session where we have seen a little bit of weakness and pullback, we've had a very, very big move all the way down from the 65.90 up to the 67.50. So it's a pretty unusual, well, it's not unusual in the sense of the last couple of weeks, but given what we've seen over the last few months, a couple of hundred pips in a week is not a bad move. And it did hit the levels that, we probably expected it would before it did pull back. At 67.50, we know is a very strong level. And look, it's only been in today's session that we have seen that weakness, and that's been a little bit of a dollar revival. We'll go into the dollar a little bit later on, but realistically, it was a very, very big move, but it's done all the right things. The swings have been the right levels. It's pulled back to the proper support levels that you can see here. And realistically, even a pullback all the way back here to that 66.80 would be very acceptable, because really that would still only be probably a 38.2 of that initial move. But also more importantly, you're going to see a lot of role reversal potentially kick in here, where it could be a good launching pad for it to go longer. What I would be looking for here is a little bit more weakness and find a bit of support at around that 66.80, a rounding bottom and a series of higher highs and higher lows from there. And then I'd be looking for long opportunities back up to the previous high and then on beyond up to the 68-cent mark. So pretty good setups coming up on here, I think. It looks like it's done its big extended move. We're waiting for a little bit more of a pullback. If it turns around earlier, of course, and pushes up higher, then you'd be looking at a different opportunity on a smaller time frame. But for me, I would prefer it came back down to this level here. So a handful more pips, about 20 more pips. And that would give us a really, really good load zone. If it fails to hold at that point, then really the next stop you'd think is going to be the 20 moving average. So if we do see weakness that continues on past this support and we get a daily close below that 66.80, and that's where we start out next week, we would be looking for weakness back into the middle of that channel or to the 20 moving average, depending on how fast the momentum is moving. But really the ideal move would be a pullback to this level here. All right, over to the US dollar CAD. And we can see here that we've got a really, really big move down, basically from where the resistance was all the way down to the support at around that 136. Now, it's trying to rally from this point onwards, but this is classic role reversal 101 as well. You can see here that we've got very strong resistance at this point, and it was support there as well. It's been very, very heavy support for quite some time as well, for the best part of 2024, really. And now, although it did break through initially, it is trying to rally up from that point. Now, it is a little bit of a no return point here. If it doesn't hold up at this level here, there's a high possibility that the 134.50 will be the next target. So really, it does need to find a little bit more strength and get above this level. As long as it's trading above 136, I think that we're going to be okay for long opportunities, really. What we're identifying here, especially early next week, if we're looking at the markets with fresh eyes early next week, and it's trading above the 136 and we start to see a sequence of higher highs and higher lows on a smaller time frame, I would be aiming for the middle of the channel in the first instance, so about 60 or 70 pips, with the ultimate move up to around that 137.20. That would be what I'd be looking for, maintaining levels inside this zone. If, of course, the daily closes below 136, I'd be looking for the opposite sequences of lower highs and lower lows on the smaller time frames, and then we would be aiming for, again, the middle channel as a scalping opportunity down to around that 135.20, and then further on to that 134.50 area. So really depending on where it closes is which way we would trade the momentum on this one. So not bad going either. Okay, US dollar yen, still continued to sell off from last week. Obviously, it hit the perfect zone, 20 moving average. And as we discussed last week, we had the 38.2 pullback, which is right on the 20 moving average, and a roll reversal zone. And it did exactly what we needed it to do. It sold off from that level. The scalping opportunity was the first one that you would have wanted, obviously down to around that 130 or 145.50 would be the target. But now, it's starting to pull up a little bit. Look, it's been a little bit volatile. if it continues to weaken, what we're looking for really here on a daily is a break below 144.50. If we get a daily close below the 144.50 next week, I would be looking for a testing of that 141.70 zone, and also probably around that 141.50, which is where the green line is here. But a daily close would need to be below 144.50 in order for that to happen. If we start to see a little bit of a resurgence and it gets itself back up 146.60 and a daily closes there, so if Monday's candle is opening around that level, I'd be looking for sequences of higher highs and higher lows up to the 20 moving average, which is currently around that 148.50. It'd be a little bit lower next week, of course, but that's what I'd be aiming for in the first instance. I wouldn't be looking at going any longer than that until we get a daily close above that 20 moving average. So pretty important zone for it, but really you're waiting for a break either of 144.50 or a break above 146.70, and a daily close on either side of those would lead the momentum to those next two levels for mine. So we'll move on now to the all-important dollar index, and you can see that the sell-off has absolutely continued and really made it all the way down to that 101. Yeah, we've been talking about that sort of 180 to 101 level for quite some time now, and it got there. It did it in three. Well, it was really aside from the fact that it was a round number and very strong support, it also did the you can see that the levels of these waves are fairly equal. I'll show you what I mean. You can go, if you measure that wave to there, that's going to be pretty close to equal to that wave from there to there, almost perfect, as you can see. And then same again from that wave there to basically where it went. So those three waves are perfectly equal. No real surprise there. We know that that happens a lot and we trade for that. But when it's compounded with a round number and a lot of weakness, of course, it makes it even easier to locate. But it's hit the zone now, and yeah, realistically, it's do or die for it. If it's starting to close, if we get a close below that the 100.80 early next week, then we're going to be looking to push on all the way down to probably the 100, so the parity again. If we start to rally from this point onwards, though, the 102 would be the next target. You can see that we've got support there around this level here and right through there. So that would be the target. That's where it went to, even when it bounced off from that level there. So realistically, 102 would be the target if we start to trend up on smaller time frames. But if we get a daily close below here, we're in awful trouble next week. So we'll see how that one goes. The euro, of course, is the one that you would be trading in this instance, and it saw an explosive move. Look, we suspected it, and it did it for us. That it basically went all the way to the 111.50, which is what our target zone would have been. Anyone who took that, I know quite a few of you did, should have been taking profit already by now. Of course, we've seen a little bit of weakness back in this last session, but that's really mainly due to just the dollar index finding that support. It's been a very, very big week for it, of course, and you can see that like I said, all along should have been taken out now, because really the stop loss, or the take profit, sorry, should have been hit. How far it comes back, look, it's going to depend on the dollar index strength, of course. If we see a little bit of a pullback here, it's not going to be the end of the world, and it could potentially push on to even higher highs again. I mean, 112.50 is not out of the question if the dollar index breaks through that 180 zone. Very, very possible that it might do that. So one to watch. It's really quite simple. I think if we're trading higher highs again early in the week and the dollar index is breaking lower, then you can start to look for those moves back up to the previous high at 111.50 in the first instance, and then 112.50 if it breaks through there as a secondary trade. But if the weakness continues and the dollar strength intensifies early in the week, then you could look for maybe pullbacks all the way back down to the 110. Very possible that it can pull back 100 pips in this instance, and that wouldn't be a bad reload zone for it. Yeah, by then the moving average would have caught up, and it gives a really nice level to bounce off from, similar to what we talked about with the CAD. Pretty good role reversal zones at that point. So not bad trading on the euro. Hopefully you're able to catch some of that move. And the all-important S&P 500, of course. Look, it's been an interesting sort of week for it. Remember, this candle isn't closed yet. It's still an hour to go in trading. So we haven't seen the full candle yet, but we can see a little bit of weakness. It's been a pretty subdued week in terms of movement. Its range has been relatively limited, and not much has changed from last week's analysis, really. If we get a daily close at the end of this week, probably a weekly close is probably the more important target, below 55.50. Then we can start to target the 20 moving average at around that sort of 54.90 to 5500 level. If we get a stronger candle and we're trending higher early next week, then we're going to look for the highs that we saw at the all-time at around that 56.70 area, and then maybe one more final push onto the 5700. Remember, we are going into a potentially weakening time of the year. September is generally one of the weakest times of the year, so just be mindful of that when you're looking at your longer term trades on the S&P, but probably more keeping them close to scalping at this stage would be the better play on this one. So subdued week, but look for those closes on the daily to identify the direction for next week. So we've had a great week's trading this week. We've seen some really, really big moves on the currencies. Hopefully you were able to take advantage of some of those. I look forward to seeing you all next week, and have a great weekend.